Hello traders, you are welcome back to the Forex Geek channel. In this video, we are going to be discussing the Ichimoku Oscillator. Now, this indicator is a nice tool that helps traders to analyze market momentum, trends, and potential reversals. So if you have used the Ichimoku Cloud before but found it a bit complex, this oscillator gives you the same insights in an easier to read format. Okay, but before we get started, smash that like button, hit subscribe, and turn on notifications so you don't miss any of our latest trading content. Okay, now let us get into it. The Ichimoku oscillator takes the core principles of the Ichimoku Cloud, all right, and converts them into a simplified oscillator format. Now, instead of displaying multiple lines overlaid on the price chart, it places these calculations in a separate oscillator window, making it much easier to interpret. So here's what the Ichimoku Cloud, or rather the Ichimoku Oscillator, here's what the Ichimoku Oscillator helps traders with. One is trend direction, because you can easily spot whether the market is in an uptrend or a downtrend with this oscillator. You can see when the oscillator is in the negative territory and dominated by the red histogram bars, obviously you know that it's a downtrend. On the other hand, when it is dominated by the green histogram bars and in the positive territory, obviously you know that it is a buy trend. So this indicator helps you with trend identification, to identify trend direction. It also helps you to identify momentum shifts. You can be able to identify when price loses strength or gains traction. How do you do that? When you notice that the histogram bars begin to drop in its length and then suddenly the bars flip from the positive to the negative, that shows that there has been a shift in momentum. Okay, like what we can see happen here, we had a breakout to the downside. Or on the other hand, when you have that, the red bars begin to shorten in length and suddenly flips to the positive territory, it shows that there has been a flip, a shift in momentum, right? It means that the momentum has shifted from bearish to bullish, and you can see that's exactly what happened here when we had this breakout to the upside. And then also, this indicator can help you to spot reversals. Okay, just like we just identified here, when a momentum shift has happened, well, it could be that the trend is reversing. It could just be a pullback, but it could also be a reversal. Okay, so when you have a reversal coming in, this indicator can help you to spot it on time so you can take advantage of the reversal. Okay, if you've struggled with the complexity of the Ichimoku Cloud, then this oscillator is quite an effective one that you might want to try out. So have you used the Ichimoku Oscillator before? Drop a comment below. Let us talk about it. Now that you know what the Ichimoku Oscillator does, let us talk about how to use it for better trade setups. All right, it is one thing to understand the functionality of the indicator. It's another thing to use it to identify good trade setups. So now, one of the main things that you should be watching out for is the value. Can you see here? The values of the oscillator. When the oscillator is in the positive territory, when the oscillator is above zero, it shows that there is buying pressure. Okay, when it is above zero, when the histogram bars are above zero, it shows that there is buying pressure and the market is likely in an uptrend and buyers are in control. Look at this, was a very practical example. We can see while the indicator was green and above the zero level, can you see that there was a prevalence of buy move? We can see again here, while this indicator was above zero, can you see that there was a domination of buyers? Can you see? So it goes on and on, right? In as much as there could be a situation whereby you just have a consolidation like what we have here now. because the bars are short, and then you can see that, you know, the red bars, the green bars, they were kind of alternating, right? They were kind of alternating too quickly. So that one, in that kind of situation, I'm just going to recommend you stay out of the market, because that's a consolidation. Okay. But when you have a prevalence of the red bars, a prevalence of the green bars above the zero level, it shows a clear uptrend. And when you have a prevalence of the red bars below the zero level, it shows a clear downtrend. Okay. So it's super easy. Yeah, it's super easy. Okay. When the value of the oscillator is below zero, when it is below zero, negative values, it shows bearish momentum. When the oscillator is below zero, it shows selling pressure, and meaning that the market is in a downtrend and sellers are dominating, like what we can see happen here. You can see that we even had it happen here again when the oscillator was, you know, predominated by the red histogram bars below the zero level. Can you see that there was a prevalence of, you know, sellers around that period? You can see that we had a significant sell move. Yeah, we had a significant sell move around that period. Okay. So you have to watch out for the color of the bars, the position of the bars with respect to the zero level. All right. Now, if the Ichimoku oscillator crosses above the zero line, it can indicate that a new bullish trend is forming, especially when you have a break of structure. That's the reason why I'm going to recommend using trend lines and your horizontal support and resistance levels. Always pay attention to these key levels on your chart, because whenever you have a break of structure and coincidentally you have a flip from bearish territory to bullish territory, it could be a trend reversal. It could be a trend reversal. All right. So this indicator can help you to observe, you know, to identify trend reversals. On the other hand, if the oscillator crosses below the zero line, if it crosses below the zero line, like what we can see happen here, it may signal a bearish trend is beginning, especially when you have a break of structure, like what we can see happen here. There was a break of structure, and of course, it coincided with this shift, with this flip from positive territory to negative territory. So that was a great time to enter a sell trade. All right, now a pro tip for you: use the Ichimoku oscillator with price action, support and resistance, and you can also add volume analysis for higher probability setups. Okay, so the goal is to get as many high probability setups as possible, not necessarily as many trades as possible, but as many high probability trades as possible, because when you have high probability trades, your chances of success are higher. All right. And how do you get high probability trades? Most of the times when you have multiple signals or multiple indicators telling you the same thing. That's why it's good to always combine price action with whatever indicator you are using. So when you have a sell signal from this indicator now, and then price action confirms it, maybe you have a break of structure, maybe you have a bearish chart pattern or a bearish candlestick pattern or something that confirms that sell signal, you know, there is a higher chance of success when you have confluence. Okay, what we call confluence. All right. So now the Ichimoku oscillator is really a great addition to your trading toolkit. While the Ichimoku Cloud is a great tool, it can be visually overwhelming, right? So the Ichimoku oscillator provides similar insights, but in a clever and more structured way. Okay. And as you can see, the Ichimoku oscillator is easier to interpret compared to the Ichimoku Cloud. The Ichimoku Cloud and you see, if you're familiar with the Ichimoku Cloud, you can see that the Ichimoku oscillator is quite easier to interpret, okay, because you get a simple oscillator with straightforward signals compared to the complexities of the Ichimoku Cloud. And then the Ichimoku oscillator is, it gives faster reaction to market changes. The oscillator helps traders identify shifts earlier than waiting for full cloud formations. And then the oscillator is also better for short-term trading because scalpers and day traders can use it for quick trend confirmation. This makes the Ichimoku Oscillator a great alternative for traders who want to use Ichimoku principles without chart clutter. So what is your preference? Ichimoku Cloud or Ichimoku Oscillator? Let me know in the comments. Even though the Ichimoku Oscillator is a powerful tool, traders can still make mistakes when using it. Okay, so here are some things to watch out for. The first is ignoring market structure. All right, do not take trades just because the oscillator crosses zero. Always confirm with trend direction. Secondly, do not make the mistake of trading without confirmation. Okay, use the Ichimoku Oscillator alongside other indicators like support and resistance, moving averages, or RSI. And finally, do not make the mistake of not considering time frames. The Ichimoku Oscillator may give false signals on lower time frames. Okay, so always check higher time frames for confirmation. All right, patience and proper risk management are key to making this indicator work for you. So that is a complete breakdown of the Ichimoku Oscillator. It's a powerful yet simplified way to analyze trends, momentum, and reversals. So whether you are a beginner or an experienced trader, this tool can help you navigate the markets more effectively. If you found this video helpful, make sure to like the video, subscribe to the channel, and turn on notifications so you never miss a new trading tutorial. Drop a comment below and let me know, how do you use the Ichimoku Oscillator in your strategy? Thank you for watching, and I'll see you in the next video. Happy trading.